Donald Trump just triggered global tariffs, and UK mortgage lenders are already slashing rates. But why would something happening in the US impact your monthly mortgage bill in the UK? In this video, we're diving into why UK mortgage rates are dropping, what it means for the UK housing market, and whether now is the right time to buy your first home or refinance. Stick around because point 4 might just change how you plan your next move in 2025. 1. Why are interest rates being cut? Let's break it down. So Trump's recent tariffs on European goods have sent ripples through global markets. Investors are fleeing to safer assets, and that's pushing down yields, especially on long-term bonds. But anyway, UK mortgage lenders often peg their mortgage rates to the cost of borrowing on global markets, not just the Bank of England. So even though the Bank of England hasn't made a move, lenders are racing to stay competitive, especially as housing demand slows and inflation starts to cool off. Mortgage lenders are now offering lower fixed rate deals to attract borrowers before any potential economic slowdown fully kicks in. So yes, tariffs in the US just made mortgages in the UK cheaper. Strange? Yes. Useful? Definitely. 2. The future of the UK housing market. So what happens next? UK house prices have been teetering since late 2023. High mortgage rates cooled demand, especially in the south. But now, with UK mortgage rates falling, buyer confidence is returning, especially in northern cities and commuter towns. But don't expect a boom. Supply is still tight, wages are stretched, and economic uncertainty has been consistent for the last 4 or 5 years. This looks more like a gentle rebound than a full-blown recovery. Experts predict that house price growth in 2025 will be modest, somewhere between 1.5 and 3%, depending on your location. That's not amazing growth, but it's a lot better than last year's stagnation. 3. How will rate drops affect first-time buyers? Okay, so this one's big. If you're a first-time buyer, dropping rates means 2 things. 1, you can borrow more. 2, your monthly payments could reduce. For example, a 1% drop on a £250,000 mortgage can reduce your monthly payment by £120 to £150 approximately, depending on the mortgage term. So while rate cuts are positive, you'll still need a strong application, clean credit, and at least 5% deposit to obtain the best rates. Deposit, should I say. Pro tip. It's good to lock in a rate now before lenders tighten up, because the best deals will be snapped up fast, as there will be a certain allocation on the new rates, and after those funds dry up, things can always change. 4. How far will mortgage rates drop in 2025? So let's talk some numbers. Most analysts expect UK mortgage rates to dip to around 3.75 to 4.25% by mid-25, especially for 5-year fixed rate deals. Why? Because inflation is easing. The Bank of England is likely to cut base rates by Q3, and mortgage lenders want to grab market share while home buyer activity slowly recovers. But don't hold out forever. Timing the absolute bottom is risky. In fact, some mortgage lenders have already started pulling ultra-low deals within 48 hours of launching them due to demand spikes. So yes, UK mortgage rates might fall a little more, but the big drops are already here. Waiting could cost you your dream home. 5. Is now a good time to buy a house? So that's a golden question. If you've got your deposit, a solid income, and a mortgage offer, yes, now could be your moment. You'll benefit from lower UK mortgage rates, less competition in a booming market, and sellers more open to negotiation. But don't rush. Buy when you're ready, not just because rates have dropped. If you're not sure, speak to a mortgage broker to get pre-approved and keep your options open. That way, if the right home comes up, you're ready to move quickly. So, tariffs across the Atlantic just made UK mortgage rates fall, and the 2025 market is shifting in real time. Are you ready to take advantage? Drop your questions in the comments, subscribe for more housing updates, and if you'd like to discuss your options, your mortgage options, just book a free, no obligation chat with me using the link in the corner of the screen. Bonus tip. If you're really interested in a property on the market and it looks like you may need to pay over the asking price to secure the deal, just bear in mind that some mortgage lenders are now looking at the price of the property on Rightmove or Zoopla and seeing the price that it's on the market for, and then valuing properties at the asking price, irrelevant of how much you're buying it for. So you may be setting yourself up for a down valuation. So I definitely discuss this potential issue that I'm noticing on the market now in spring 25 with your estate agent. Mortgage warning: as a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's video. Please check out the show notes for a recap with access to any links discussed today. And if you do feel like you're getting value from this video, please do consider subscribing and ringing the bell to receive notifications so we can carry on providing you with value. Have a beautiful day. I'll see you in the next one.